ETFs are the most powerful way to build your wealth in the stock market. It's no wonder their popularity has exploded since their inception in 1993, but how do you invest in them? This is the guide that I wish I had when I was first getting started with investing. I've packed a lot of value into this video, and there's going to be a lot of tips and strategies that I talk about that many of you have probably never even heard of before, so let's get started for starters. Investing can sometimes seem complex, and many people think you need special knowledge. But there's a simpler way to invest. Exchange-traded funds, or ETFs, make investing straightforward and accessible. ETFs are powerful tools for building wealth. They are like baskets of stocks or bonds, allowing you to invest in many assets at once. This is called diversification, which helps reduce risk. When one investment goes down, others might go up. ETFs are also affordable, with low fees, meaning more of your money goes towards growing your wealth. Furthermore, ETFs are very flexible. You can buy and sell them easily on stock exchanges. They are a good choice for both new and experienced investors, offering a simple way to invest in the market. ETFs can help you reach your financial goals. Let's learn more about these powerful investment tools. Moving on to Section 2. What are ETFs? ETFs are investment funds traded on stock exchanges, similar to mutual funds. However, ETFs have some key differences that make them special. They hold a collection of assets such as stocks, bonds, or commodities. Each ETF tracks a specific index, sector, or investment strategy. For example, an S&P 500 ETF holds the 500 stocks in the S&P 500 index. This means you can invest in the entire S&P 500 with just one ETF. ETFs are priced and traded throughout the trading day, and their prices fluctuate based on the value of the underlying assets. This is different from mutual funds, which are priced only once per day. ETFs offer more flexibility for investors who want to buy or sell during market hours. They are a simple and efficient way to invest, providing diversification, transparency, and liquidity. They offer a compelling alternative to traditional mutual funds. Why choose ETFs? ETFs offer several advantages over other types of investments, making them a popular choice for investors of all levels. Firstly, ETFs are highly diversified. They hold a basket of assets, reducing the risk of investing in a single stock or bond. Diversification helps protect your portfolio from big losses. If one asset performs poorly, others can offset those losses. Secondly, ETFs are very cost-effective. They typically have lower expense ratios than mutual funds, which means you keep more of your returns. Lower fees can have a significant impact on your long-term investment growth. Finally, ETFs are very transparent. You always know what assets are in an ETF, and this information is readily available. This transparency helps you make informed investment decisions, allowing you to align your investments with your financial goals. ETFs for every investor. ETFs are a versatile investment tool. There are ETFs for every investment strategy, catering to a wide range of investor needs and risk tolerances. For investors seeking long-term growth ETFs focus on companies with high growth potential. These companies are often in innovative industries like technology or healthcare. They reinvest profits back into the business, leading to higher future earnings. For investors seeking value ETFs focus on undervalued companies. These companies may be overlooked by the market, but have strong fundamentals and the potential for future growth. Value investors believe these companies are trading below their true worth. For investors seeking income, dividend ETFs focus on companies that pay dividends. Dividends are regular payments made to shareholders, providing a steady stream of income. This can be particularly attractive for retirees or investors seeking passive income. Growth ETFs are designed for investors seeking long-term capital appreciation. These ETFs focus on companies expected to grow at above-average rates, often found in innovative sectors like technology, healthcare, and consumer discretionary. Growth companies typically reinvest profits back into the business, aiming to expand market share and develop new products. While they may not pay high dividends, their focus is on increasing the value of the company over time. Growth ETFs can be more volatile than other types of ETFs because growth companies are often younger and less established, making them more susceptible to economic downturns. However, over the long term, growth ETFs have the potential to generate substantial returns for investors. Investing in growth ETFs requires a long-term perspective. It's important to be patient and ride out market fluctuations. By investing in companies shaping the future, growth ETFs offer a compelling opportunity to participate in the innovation and progress of the global economy. Value ETFs offer a different approach to investing. They focus on companies considered undervalued by the market. These companies may be overlooked or temporarily out of favor, but they possess strong underlying fundamentals. Value investors believe that the market sometimes misprices companies. They look for companies with a solid track record of earnings, strong balance sheets, and a history of dividend payments. These companies may be trading at a discount to their intrinsic value. Value ETFs aim to identify these hidden gems and capitalize on their potential for future growth. While value stocks may not experience rapid price increases like growth stocks, they offer the potential for steady appreciation and dividend income. Value investing requires patience and a willingness to go against the crowd. It's about identifying companies with strong fundamentals that the market may be temporarily undervaluing. By investing in these companies, value ETFs can provide long-term growth and income potential for patient investors. Dividend ETFs are an attractive option for investors seeking regular income from their investments. These ETFs focus on companies with a history of paying dividends to shareholders. Dividends are a portion of a company's profits distributed to investors. Dividend ETFs can provide a steady stream of passive income, which can be particularly beneficial for retirees or investors seeking current income. Dividend-paying companies are often well-established and financially stable. They generate consistent profits and have a shareholder-friendly policy of sharing those profits with investors. Dividend ETFs offer a combination of income and potential for growth. While the primary focus is on dividend payments, the underlying companies may also experience price appreciation over time. This can enhance overall returns for investors. Investing in dividend ETFs provides a way to participate in the success of profitable companies. It's a strategy that combines income generation with the potential for long-term capital growth. Bond ETFs, stability and income. Bond ETFs offer a way to invest in a diversified portfolio of bonds. Bonds are debt securities issued by governments or corporations. They represent loans made to these entities, and investors receive interest payments over the life of the bond. Bond ETFs provide several benefits, including diversification, income generation, and potential capital preservation. By investing in a variety of bonds, investors can reduce the risk associated with holding individual bonds. Bond ETFs also generate regular interest payments, providing a steady stream of income. Bond ETFs can play a role in diversifying a portfolio and managing risk. They tend to be less volatile than stock ETFs, offering a degree of stability and capital preservation. Bond ETFs are often used to balance out the riskier components of an investment portfolio, such as stocks. Investing in bond ETFs provides a way to access the bond market with ease and efficiency. They offer a combination of income, diversification, and potential capital preservation, making them a valuable addition to any diversified investment portfolio. International ETFs, expanding your horizons. International ETFs allow investors to diversify beyond their domestic markets. These ETFs invest in companies located in foreign countries, providing exposure to global economic growth and different investment opportunities. International ETFs offer a way to expand investment horizons and participate in the growth of emerging markets. They provide access to companies and industries not available in domestic markets, enhancing diversification and reducing overall portfolio risk. Investing in international ETFs requires careful consideration of factors such as currency fluctuations, political risks, and economic conditions in the target countries. However, the potential rewards of participating in global economic growth can outweigh these risks for investors seeking broader diversification. International ETFs offer a convenient way to access global markets and participate in the growth of economies around the world. Choosing the right ETFs, a step-by-step guide. Choosing the right ETFs can seem daunting, but it doesn't have to be. By following a simple step-by-step guide, investors can make informed decisions aligned with their financial goals and risk tolerance. Firstly, define your investment goals. Are you seeking long-term growth, current income, or a combination of both? Your investment goals will guide your ETF selection process. Secondly, assess your risk tolerance. How much volatility are you comfortable with? Growth ETFs tend to be more volatile than value or dividend ETFs. Bond ETFs offer more stability but may have lower return potential. Thirdly, research different ETFs. Look at their expense ratios, trading volumes, and past performance. Compare ETFs within the same category to find the best options. Consider factors like the ETF's investment strategy, underlying index, and holdings. Conclusion: start your ETF journey today. ETFs are powerful investment tools that can help investors of all levels achieve their financial goals. They offer a unique combination of diversification, cost-effectiveness, and flexibility. Whether you're seeking long-term growth, current income, or a balanced approach, there's an ETF to suit your needs. By understanding the different types of ETFs and following a simple selection process, you can make informed investment decisions. Start exploring the world of ETFs today. These versatile investment vehicles can empower you to build a diversified portfolio, reduce risk, and achieve your financial aspirations.